What is going on, everyone? My name is Kenneth Beard, and I'm back with another overall market breakdown where I go over stock indices and my top favorite stock picks for the upcoming week. So I'm hop straight into this. Um, yes, so today's Sunday. We just had a full week of the market, but if you all watched my previous market breakdowns, uh, you should all be informed as to the current conditions of the overall market. So yes, the overall market is the S&P is seeing, these are the futures, of course, and we're seeing a nice uptrend here. We've been seeing a nice uptrend, but we just hit a top lately, around 39, 59, 25 up here on ES, around there. Not exactly. That's the highs. But ever since we got the highs, we just been rolling over with some pretty high volume. Yeah, we just been rolling over, and excuse me, we were rolling over. We've been seeing the market try to in the week make a push higher, but failed, and ultimately continue to drive to the downside, and it's now sitting at the 50 SMA. So whenever we see a pull back to the 50 SMA, it usually has some pretty decent volume. Just because for the S&P to actually get down to that 50 SMA, there has to be, in my opinion, quite a bit of short selling, quite a bit of short interest in the market, and so um, we see the heavy volume here, and so the volume is picking up, but I believe that we could potentially see something like this, a rally from the simple moving average as we saw here. Um, the stock rallied up to its new highs, pulled back with that decent volume, and ultimately got supported up at the 20 SMA and is rallying back up to the upside. We made new highs, pulling back, and now we're testing support here at the SMA. So I believe if the market is to stay in normal uh, volatility infrastructure, I believe that the market could potentially see a rally back up to the upside. That's just my opinion, though. The market could, of course, continue to sell off through the SMA and just continue to dump. So that is for ES, the Russell 2000. The reverse, let me get rid of these. Russell 2000 has been consolidating. We've been seeing a strong push up in the Russell 2000, and it was looking nice, but I already knew that the Russell 2000 didn't have much more to offer when it came to this rally because it's overbought, um, very overbought, and has been for a while now. And so volume, of course, with the overall volatility in the market started to kick in at the end of the week, and we were seeing the Russell 2000 pull back towards some support, our prior resistance, of course. Um, but it's sitting right above the 20 SMA. So technically, essentially, we're still bullish here, but we're not making new highs. So in a bit of a consolidation to the just going sideways. But as long as we hold up above our 20 SMA, we're not seeing any extreme selling pressure, but just moderate volume is kicking in, and you can see the big swings on the 1 hour chart. Um, and so off the highs, we are down, but so off the highs, we're down about 5%. If you want to count the whole thing, we're down about 6.4% off the highs. And so it's not too big of a pullback compared to the growth that we've seen in the overall market. The growth that we've seen has been substantial compared to this, and we see pullbacks like this. So everything with this is normal. So I believe that if JNJ, not JNJ, excuse me, that's one of my stocks. I believe that if the market holds above here, we can see our way back up to the upside. If the market, stays in its bullish trend overall. Crude oil was up, but we started to make a top there as well. I believe if you just see the trend here, everything pretty much that last day of the market open Friday, we started to see a big drag in commodities and equities and futures. So, and it's perfectly normal. So I'm just here to forecast this for you all. But oil is dragging back just a tiny bit, and so nothing to be concerned about here. But oil is just seeing a normal correction here before making its way back higher, which we could do, or we could potentially see a greater pullback as we're still in these overbought areas here. But of course, we've seen it many times again where we will be overbought, but continue to push higher. And so we will keep the eye out for crude oil. But as of right now, crude oil is looking very strong on a spectrum of just an overall trend. So crude oil there. Bitcoin, obviously, previously, before seeing a huge pullback correction, we made it up to $57,000 per Bitcoin, which is extraordinary. But recently, we've been pulling back, and we're back down to that $45,000 mark. And so, if you're planning to get discounted Bitcoin, this could be your opportunity. But of course, like all commodities and stocks and futures, we could potentially continue to drop lower, and that's the risk that you have to be willing to take. So that's Bitcoin. Gold. If you're a gold investor, I'd hate to be you, but if you're a gold shorter, I'd love to be you, because gold is looking quite terrible. Not sure why, but gold has been selling off into no man's land lately, breaking out of some lows here. So we're off on gold futures. Since the highs, I don't even want to know. Since the highs, gold is down 17% since the highs. So quite substantial there for gold. Pretty wild correction there. So gold could continue to go lower, or gold could. It's not in any oversold conditions yet as much, so it could have room to even go lower than this. So that is for gold. So that's all the indexes I'm going to go over as of right now. Oh yes, let me break down VIX. Volatility was sitting at, it got up to 30. We know anywhere over 22 on volatility is quite high. And so volatility got up all the way to 30. And since we're seeing volatility at 30, we saw that pull back in the overall market, that fear factor start to come in. And but now, the next day we saw quite a bit of stability in volatility. Volatility didn't continue to rally; it just kind of went sideways. So right now we're sitting at about $27.95 for volatility, and so volatility could pull back, to normal levels. That would give us a clear indication that the market is beginning to rebound here. So that's my outlook on indices. Stocks now. First stock I'm gonna break down is Walmart. Walmart had earnings. I believe. When were these earnings? Earnings were on the 18th to 18/21. So I think that's Wednesday. was sometime last week. Anyways, we beat by $1.39 a share, and right after that, we saw the market of Walmart just kind of tank all the way down to 130 a share. So from earnings day down, we're seeing a 12% drop, 17 points in just 10 days. Um, so that is very extraordinary. And so seeing that drop like that, we're also in the oversold area. Being in the oversold area gives me an indication that we could see reversal here on Walmart soon. We could see Walmart start to pull back towards its SMAs as we are very overextended from them. Very overextended from the 20, the 180, and the 50. So, seeing that, I believe that Walmart, if it holds above 130, we could see this thing start to reverse. Walmart has a relative volume of 1.7, which is high. Anything over 1.5 or vol is considered high relative volume. Its average volume is 8.39 million. Its volume currently is 14.1 million. So you see the volume increase on earnings. You saw the volume increase as well. And we've been seeing some high implied volatility start to kind of creep up here. And so with that being said, I think that this market could potentially go back up and correct itself and maybe potentially even fill a gap up here at 137.50 or 138.70 ish, where I have my trend lines at. We have a gap here, and this gap could be filled if we make it back up to those levels. We also have, and I'm gonna look it up for Walmart. Walmart has a 52-week low of 27.37. It's off the 52-week low of 27.37%, and its target price is 159.94 by analyst direction. And so we could see Walmart continue to rally back even above the highs here. So that's my game plan on Walmart, is to watch for that bounce, watch for the confirmation, be confirmed. Jesus Christ. Next stock is Johnson & Johnson here. Johnson & Johnson is looking like Walmart a bit in the sense that it's pulling back very drastically towards the lows. Why do so many people text me? Do you guys ever just want to make a video and you just get a silence on my phone? People are ridiculous. Forgive me about that. But anyways, what I was saying was Johnson & Johnson is looking a little bit like Walmart in the sense that it's pulling back drastically. We pulled back to a very critical key support level, which we've seen various and numerous bounces from, which is 160. It would be reasonable that if this is an area of support, that we could potentially see a bounce again. Now, I understand that on the daily chart, it looks as if the market closed very strong, which it on the daily chart it did. But if you look at the 4-hour chart here on Johnson & Johnson, it closed very much lower than 160, and it did, see that. But the after hours, we're sitting right back above 160 with a very bullish candle. I believe that if Johnson & Johnson can hold up, that we could see a new uptrend start to begin. This is a critical support level. This could be an old-fashioned breakout and retest just on a larger time frame for longer-term traders, swing traders, investors, so on and so forth. Not really investors, because we're speculators, of course. If you're a trader, you're a speculator. But seeing that pullback, most stocks and equities, like I said, stocks are equities. Most equities pulling back. Most equities are seeing, and this is the trend that this is the pattern that I'm seeing. When you trade for quite a bit of time, when you look at charts for quite a bit of time, you see patterns, and the pattern is that most equities are pulling back drastically. As soon as the market decides to rebound itself, these things are going back up. So Johnson & Johnson here, let's look at some stats from Johnson & Johnson. There's a few stats that I really primarily focus on. I want you guys to keep a close eye on that, and so you can kind of understand what I look for when choosing stocks. But Johnson & Johnson here has a price target of 185.44 by analyst direction. So that leads me to believe that this thing isn't going to go much lower, but we're off 45% off the 52-week lows. We've been seeing strength in Johnson & Johnson. Its relative volume is 1.7. Its average volume is 8.22 million, and its volume as of right now is 14 million. So anything over 1.5 a relative volume is decent. There are eyes on Johnson & Johnson with a high relative volume. There are eyes watching it. It heavily follows the S&P 500 as well. And it's a pharmaceutical stock, and it's in the drug healthcare sector. We know drug and healthcare sector stocks are going to be heavily focused around the coronavirus vaccine, which Johnson & Johnson has been contracted to make various antidotes for. So we could see Johnson & Johnson hold up here and have a higher intrinsic value. So the play on this would be to wait for the confirmation on Johnson & Johnson. Of course, never be too certain. Always minimize your downside exposure. Always minimize your downside risk, because these stocks and these names do have a chance to continue to go lower despite the news and despite what you may think. So whatever game plan that you go into the market with, know that it is 80% mental and 20% skill. The pattern is easy to see, but the minimalization to downside exposure is what is very important and is what is key. So keep that in mind when investing and trading. But I hope you all enjoyed this video. Those are my 2 stock picks, and those are stock indices breaking down for you all. I will see you all in the next video.